Good afternoon, everyone, and welcome. We're just going to provide folks probably another 30 seconds or so to arrive into this virtual room. All right. Hello, everybody. And as always, I'm your host, Anna Pham, Restaurants Canada Director of Content. We're so pleased to be bringing you today's session in partnership with Actual, formerly Atlas, a Restaurants Canada partner and trusted advisor and platform to many operators. Over the years, Actual has helped businesses across the country further understand the complexities of tip management and compliance, and we're grateful to continue bringing their expertise to our members. So before we begin, a couple of quick housekeeping rules. There is a poll. We will be kicking it off with a poll. So please take a minute to answer so that we can further understand our attendees today. Today's webinar is being recorded, and the recording will be shared with all registrants, including today's presentation as a PDF. Please submit your questions using the Q&A box, and we'll answer as many as we can throughout and at the end of the session. And if you have any technical difficulties at all, please feel free to message us in the chat box, and we have a team who can support you. So with that, it's now my pleasure to introduce today's speakers. Afshin Mousavian, CEO and co-founder of Actual, and James Rhodes, Senior Counsel of Taxation Lawyers LLP. Afshin, I'll hand it over to you.
Thank you so much, Anna. Really appreciate you and the Restaurants Canada team for your continued collaboration with us. And James, thank you again for joining us today. Hey, everyone. Hope you're all having a fantastic Thursday so far. Hard to believe we're already halfway through the year, and a lot has happened since the start of the year. Now, many of you, we had a chance and the pleasure to meet you all at the Restaurants Canada show earlier this year, and we look forward to also get to know and connect with many of you that we haven't had a pleasure of meeting yet. Today's presentation is simple. It is looking to address one of the most concerning topics that operators and their teams are constantly thinking about. And our goal here is to give actionable insights that are really put together based on real life experiences from operators and from an experienced counsel here who deals with this topic on a day-to-day basis. We're going to kick things off with a quick overview of what we're going to go over today. And throughout the presentation, there are some content that I'll be sharing from our end, as well as some specific content that James will be sharing with regards to regulations at a federal and provincial level. So let's get started. Oh, and one quick thing here is that I guess just for the sake of ensuring that everyone can have access to the content being shared, if questions are coming up, really appreciate it if you can please put the questions inside of the question window. And I see that there's a first question here saying, is anyone else getting an echo on this recording? So maybe we'll pause a quick second there to see if anyone is getting an echo. Please let us know and we'll try and see what we need to do. Great. I think we got a lot of no's. Excellent. So I'm not sure. It's an anonymous sender, but hopefully they can sort of make some adjustments on their end. Excellent. So we'll get started. Well, like I said, today's conversation is about tips, and we know that they're central to the world of any hospitality operator. Our goal is to really highlight some of the critical regulations that you should be aware of at a federal and a provincial level. We are Actual. We are a technology company based out of Toronto, Canada. You may have previously known us as Atlas. The name of the company was rebranded at the Restaurants Canada show, actually. It was something that we were planning for quite a number of months. And the reason for the rebrand was that we wanted a name that better aligned for what we stand for. We know that hospitality runs on forecasts, on planning, but actuals is what we really depend on. That is the truth of what took place so that we can make better plans. If you don't know where you are, it's hard for you to make a plan of where you want to go. It's the same team, same ownership, same structure, same principles, just a new name that really reflects all that we stand for, numbers that you can trust. Now, for today's agenda, we're going to start off with a quick intro to Actual. And just see here, I got another question here. Yes, you will also get a recording of this as well. Um, Quick intro to Actual. High level of some of the stuff that we found operators often, want to get a quick understanding of, is this an issue for them or not? So we'll go over some of the common tip models that cause issues at a federal and provincial level. We'll do a very quick overview of direct versus controlled. Many of you may already be familiar with this, but we want to set the stage for some of the changes that have taken place and some of the areas that we're seeing regulators are essentially pressing on now. From there, we move on to tip committees, something that many operators are looking to learn more about to figure out how to best put them in place, manage them on a day-to-day, and why should you do it in the first place. Then conversation really focuses on specific insights with regards to how audits take place, if you're being audited, what you should do and what not to do. And finally, um, once we've covered all the questions and concerns, for those interested, we'll talk about how Actual is helping operators across Canada manage some of these challenging tasks on a day-to-day basis. Okay. So we are a technology company based out of Toronto, Canada. We build technology specifically for the hospitality sector. That is restaurants, hotels, quick service, golf courses, wineries, and many other similar types of operators. We have three products. Actual Operations focuses with centralizing your data, no more chasing your POS or reservation or scheduling data. We integrate with all those systems, pulling it all in, especially valuable for those multi-location operators who use different systems at each location. Tips, which is going to be the focus of our conversation today. And finally, Payroll, which is the latest product we released earlier this year. Payroll is currently only available in Canada. The other two tools are available in Canada and the US. We do work with operators of all sizes, like I mentioned, from international hotels to franchises, single location, multi-location, coffee shops, even cookie stores, Michelin star restaurants, and quick service. Really, every single logo on this page uses us for our tip management tool. Some of them use us for our reporting and payroll as well. And we're very proud to be partners with Restaurants Canada, who's been a great partner with us over the past few years, as well as every other restaurant and hospitality association across Canada, from Nova Scotia to BC, Alberta, Manitoba, Ontario. And finally, the Food and Wine Industry Navigator, who is the largest Facebook group for hospitality employees and a resource and a great partner to them. And we're proud to be partners with them for the sake of educating both sides of the industry. Okay, jumping right in. This is where things get a bit more specific. So I know that there's some questions coming in. I'm going to finish off the slides and then I'll pause to see if there's any insights that James wants to add. During that time, I'll see if we can answer the questions that are relevant at that time, or if it makes sense to pause and answer them at the end. So please keep them coming. Thank you for that. There are some tip models that right off the bat, they give a signal and alert to either federal or provincial regulators. We're going to cover some of the top ones that we've come across. This list isn't inclusive of all the issues by any means, but we've picked some of the ones that we come across most often, first at a federal level. So you may have a tip model that says, hey, as an example, this supervisor gets a flat rate of $500 per week in tips. Well, there is a flag there because as soon as an auditor takes a look at this or someone hears about this type of a tip model, their flag is, well, how is it that the business can guarantee tips? Really, the point there is, well, what happens if in a given week there isn't any tips? Is that person still going to get 500? Is this 500 or whatever the payment is this stated in their employment contract? And if the answer to either one of those is yes, this by definition means that the business has guaranteed these tips and they're no longer are tips, they would be considered wages. There is the second one, which is the business sets the tip division rules with the team. They say that, look, we've talked to the team, they've all said that they're okay with this, but we went ahead and we have a policy and the business sent this policy and every employee signs it off. So we're good. They're fully aware. And you're absolutely right. They are fully aware. But by the business taking lead here and setting those rules and being in charge of all of that process that I mentioned, they are, again, by definition, controlling how the tips are being divided, that's another flag which could consider the tip model controlled. The third is, hey, we have a tip model and maybe some of our team gets paid daily, some of them get paid weekly or bi-weekly. And this one is an interesting one because this is something we can actually help a lot of operators with through our structure and how we set things up. But the devil is in the details. If you haven't really looked at what the CRA actually looks for on day to day, their definition is that you need to make sure you can prove that the tips were no longer in the possession of the business at the end of the shift. So if you have a lunch shift, breakfast shift, like let's say breakfast shift, a lunch shift, a dinner shift, you need to make sure you have proof that the tip money, the ones that you remember on the credit card or debit cards, were not in your possession as the business at the end of those shifts. And there is a way to handle this, but if you're just managing it through your regular bank account and money movement or picking up cash and giving to the employees, there could be some concerns here. This is something we'll dive into a little bit more later. Someone else that comes across a process and they say, hey, we've seen some of this content, we have put together a tip committee, people are aware, tip committee is taking charge, but we don't have any paperwork at all. And that's an issue, and that's something that James will get into a little bit more. Unfortunately, your word isn't good enough. So there's got to be some sort of formality, some sort of paperwork that shows that this is formalized, the dates, when, who enforced it, how was it put together, really make a difference. And finally, one of the other ones that we've come across recently is as folks have sort of gotten more and more educated around how to manage direct versus controlled, a lot of them understand that they can't be in possession of tips. So one of the solutions that they've come up with is they say, look, I have my regular business bank account. Let's say my business bank account is with Bank of Montreal. I went ahead and I talked to RBC and opened up a new bank account with RBC. Now I'm moving the money for tips from my regular bank account into the RBC account. And from RBC, our team sends out the tips. And while that looks like it's separated, unfortunately, it isn't, because the question that would be asked is, hold on a second, who owns and controls that other bank account? If it's still the business, then the business is still in control. And the reason why all of these things matter and why we keep saying control, control, control is because if your tip model is considered controlled, there's a very basic formula that could show you what your potential penalties could be. This calculator exists on our website. If you ever wanted to see it, you could go and visit onactual.com. Under the more section, you'll see the calculators. And it says if a business made $1 million in sales and their average tips was 20%, they generate $200,000 of tips. If their tip model is controlled due to these reasons or many other reasons, you will be responsible as the business for the CPP and EI that should have been deducted from the employees and should have been contributed by the business because controlled tips are considered wages. In this case, the CRA would hold you, the business, responsible, meaning that your penalty could be 30,000, and this is a ratio. So that's why we say it's 30,000 per every million. And the dangerous part is if your business has been operating for a number of years, we've seen them go back a few years, and we've seen them go back, for instance, 3 years. So the liability can be 90,000 per every $1 million generated. I'll pause there and I'll pass it over to our expert, James, to see what else he can add to this, because of course, a lot of this was based on some of the insights we captured from him.
I'm gonna just go through them a tad differently.
Sure.
I mean, the first, because there's a good question here about, is it legal for the business to determine controlled tip distribution, or does it work like direct tips? So the first question I'm always telling businesses, do you want a controlled tip system or do you want a direct tip system? The idea of if it's a controlled tip system, you are taking source deductions from your employee and you're paying, you're taking the employee version and you're paying the employer version. So, and you collect it from them and remit it. We all know what the issue is that the restaurant across the street is a direct tip system. And so all the servers are running around with double the money because there's no source deductions. But to me, that's the first question for all restaurants. It is legal. It's completely legal for you to say, we're going to have a controlled tip system. If you have a controlled tip system, I mean, you're paying your employer portion, but you're deducting the employee, you're getting the employee portion from them. So once again, you've mitigated your risk, but you also have the ability to control your distribution. So I'm always talking to restaurants and they're like, why would you do that? And I'm like, well, say if you have a back of the house retention issue and you want them to have more tips, you could create a controlled tip system where they get a greater control of the tips because otherwise no one else in the restaurant will agree to do that. So you're looking at, losing your experienced chefs if you don't give them more tips. So that's why you do a control tip system. But you have a choice, control versus direct, right? That's really the employer's first choice. I usually have the employers go ask their employees because CRA have been in audits where CRA likes that. They like that the employer went into the employees and said, do you want direct or do you want control? So if you have a direct controlled system, this is the issue, right? You got to watch like walking, as they say, walking a razor blade, because any mistake you make and you're a controlled tip system and CRA defaults to a control tip system. So you're always looking out for two real elements, control and possession. So like number one, the issue with getting a flat rate is actually what I've seen is like if the employer says, you manager, I'm going to guarantee you X number of dollars of tips per week. Or, you got this issue, you can't promote a server to a manager, right? Because now they're going to make less money because they're not in the tip pool. You say to the server, all right, if I make you a manager, I'll guarantee you part of that tip pool. You can't do that because now as employer, you're exercising control over the employee gratuity pool, and that just tainted the entire pool. Even though the employees might have decided the ratio, the fact that you said this employee or range of employees gets a certain amount of tips, that's actual control. So your entire system is now you've destroyed your entire system. So this is where I always say, the employees can decide, the employer cannot. If you have a direct tip system, the employer actually can sort of set the box as to who are the employees that should get tips, but the actual arrangement as to who gets what share inside that box, that's always got to be up to your employees.
Mhm.
So this is where the next one, right? The business sets the tip division rules with the team, right? Again, the employer cannot be involved in the decision at all. It's got to be decided by the employees. And, when I say employees, it's great for a small place, but I find in it, to ever have any coherence that you've got to have an employee tip committee that will then manage all the employees, like, an elected official. So tip pools that are paid weekly or bi-weekly. So this is where I just want to break it down between who's got the money. I see a lot of problems still where you're doing, the back of the house tip out. So the servers might take all their tips, or the front of the house takes their tips at the end of the shift. Great. That's what CRA wants for a control tip system. The problem is that the tip out to the back of the house, because they don't, they might get a lot and you're used to building it up for 2 weeks to sort of maybe create an average over all shares so that some people aren't jockeying for the weekend shifts or not. Um, you don't want to do that. You do not, as the employer, want any money in your hands the minute the shift ends, technically for the employee, right? So if you've got a tip out, you've got to make sure that the tip out is not in your possession, right? You might not have control over it, but you can still have possession over it, and that's enough for CRA. So this is where I see a lot of mistakes by restaurant employers who have, kept the money for whatever reason to distribute it at the 2 week mark, thinking it's not a lot, no big deal. It is the CRA. It's a big deal because that is possession of gratuities after the end of the shift. So that's why, when you say tip pools are paid weekly or bi-weekly, if it's by, a distribution from the money you have, you've got to do it at the end of the shift. If you look at CRA's bulletin, they say it twice. They say it as a reason and they give you the example on that. So where I get a lot of confusion is, okay, once it's with the employees, say the employee committee, that's up to the employee committee. When the employee committee decides to distribute it, that's up to them because they're the agent for the employees. When they get the money, all employees have got the money, right? They just decide who gets what specifically. So that's where if you're getting confused and you hear about, say the tip pools, the tip committee is doing it every 2 weeks, that's where, okay, it's fine because it's the employees. You, as long as you employer do not have possession or control of those funds after the end of the shift, that's your obligation to CRA. That's what CRA wants to see. So that's where when you see number 3, you just got to remember there's a dichotomy between what you have as employer and what the tip committee or the employees have. We have a tip committee but no paperwork. I can't tell you, this is every single one is a problem. because usually it's historical, right? It's that way. We've never messed with it. The employees decided it. And I know I was like, okay, I understand that, but uh, especially if an employee is told CRA, and we'll talk about why they might say that, but if an employee said, oh, it was decided by the employer, which is, if you look at Restaurant Mano case, that's what happened, and Andrew Pellard. So if you have an employee telling CRA that the manager, the employer made it up, CRA is like, okay, well, I need to see it in writing that the employees did it. And you'll be like, I don't have it in writing because the employees have always done it. It leads to a problem because you've got to get your employees together to all say, we did it. And CRA still doesn't work it. So I always tell people the easiest thing you can do to save this issue is have the committee or your employees put it in paper, whenever they vote once a year or biannually. We, the tip committee, hereby do is a tip arrangement, right? Write out the entire thing. A lot of times I'm seeing it partial, like because the front of the house might just takes it, right? Usually the server's just taking it and paying out some percentage, but write that out. Write that out to show that the employees agreed to that. So, and it's very important to show that. And the reason is CRA likes paper, right? You employer, you can't be trusted because you're going to get a bill, right? If it's a controlled tip. So you've got it to be safe, right? You get everything in writing. What did the committee do? And I'm going to talk about this later about what CRA's expanded questions are, but being in writing is the number one thing that you can do to protect yourself. So, and we have a separate bank account we pay tips out. That's, again, CRA looks at control, right? And if you own that bank account, and I should say, there's not a lot of cases on tips. There's really two. And then it becomes when I'm telling people about my interpretation, it's sort of applying all my tax cases that I've done, like 200 cases. And I can tell you, there's a case of X where the people took the money out of the corporation, opened a bank account in their name, and CRA said, nope, you've taken the money, that's yours. And they're like, but wait, it was for the corporation. It was always for the corporation. CRA's like, don't care. If you open a bank account, even though you might not have a bank card, you might not have access to it, I always tell people, but you have the ability to close it. And when you close it, the bank will write a check to you. And CRA says that, like, listen, when we looked at that account, your name is on it. That's control. Whether you had the bank card or not is irrelevant to the CRA. So that's why I say, don't do it. Don't open a bank account in your name, right? An employee, or I have the employees go out and they hire a bookkeeper and the bookkeeper opens a bank account, right? Very, very easy to do. It's just, that's their agent.
Mhm. Exactly. Okay, great. I'm doing a quick time check. We're at halfway there. So on the provincial issues, and this is the part that James will again sort of dive into a little bit later as well. But as you understand that federally, all of the concerns are related to the CRA. But provincially, they're more so related to the Employment Standards Act, which is really set at a provincial level. So each province could have a different one. In most cases, we see that there's a lot of common elements, and there are certain elements that are unique to each province. So, number one, we have a percentage that goes to the admin team for managing tips. Well, the issue here is that every Employment Standards Act is very specific about how tips should be divided and who can earn tips. And their point is that it should be people who contributed to the service. It should be those can be the tip earning employees. So if you have one of the employees who ends up sort of, let's say for instance, a server, and he's really a spreadsheet wizard, and he also ends up doing the tip division, and as a result of that, he gets an extra percent of tip earnings, that's fine. But if you have an office administrator who's looking after this, that could be an issue. The way that you could really protect this is that the tip committee can say, hey, this office admin, we give them permission to take this amount because we don't want to be in charge of doing this. We maybe are, don't want to be responsible for it. Maybe don't have the skill set to do it. Maybe don't have the systems to do it. But it is important for them to agree to that. Maybe I'll pause there, James, if you want to add anything to that specific one.
So I guess people are always like, federal, provincial, they mix it all up, government sucks. It's all the same, right? This is where you've got to understand that you've got two levels of fun. Your federal level of fun, that's Canada Revenue Agency. They're looking at whether your tips are controlled or direct, and whether you were required to collect a CPP or EI. The provincial fun, and there's so many fun provincial people, I call them a little different. So WSIB is your first fund, right? Where they require you to pay contribution based on earnings. So WSIB Ontario's policy right now, I believe, is that a um, control tip is subject to WSIB, so you've got to take contributions on it. A direct tip is not. I know if you're in BC, BC took a really hard stance and they talked about, well, it's a verified tip. And a verified tip is like a whole new animal, is like basically if a verified tip in their eyes is tips that come in through your POS system that you could count. And if it comes in through your system and you can verify it, then it's subject to insurable earnings. So that's, I mean, I don't know what I call WSIB a tax, but I don't know, I'd call it tax. But then there's another agent, if you're in Ontario, you got your employer health tax, right? Where that, if it's a control tip, again, that's viewed as remuneration paid by the employer. So you've got to, if you're over that, I think it's still $1 million threshold, then you've got to pay contributions on that. And then you have the Ministry of Labor who administers the Employment Standards Act of Ontario and, the Employer Standards Act throughout different provinces. I call the cops. They're looking at things where, hey, what's your tip system? Did you pay it 100% out to the employees or did you keep it? If you did keep it, or a portion of it, were you doing a similar position as someone in the restaurant or who gets tips and that's the same? Or if not, there was no one at your position, can you show us another restaurant that has that same position with that same ratio? Basically, they don't want the employers, dipping into the tips. So that's where I call them the cops, right? They're looking at, a reasonable. So they're like, hey, did you pay it out? If you paid it out once a year to the employees, that's unreasonable in their eyes. But if you're paying it out biweekly, they don't care. And again, Employment Standards Act, Ministry of Labor does not care about direct versus control. That's CRA. The Ministry of Labor, all they care about is compliance to the Employment Standards Act, which is, okay, are you following that act, right? Did you pay 100% of the tips? If you took a tip, did you post the tip sharing somewhere visible? Those kind of requirements, right? But this is where we get into these issues like, okay, you got the owner participating in tips. If you're taking off credit card fees, right? This is where some in and some out, right? Ontario is the best province that they allow, what your credit card fee is or prescribed rate. I think it's BC says no, which to me, that makes no sense, right? They pay $100 in gratuity. You don't get $100, but you get $97, right? They take the 3% fee at the least. BC says, sorry, you have to pay $100 over. So this is where, and the other one that happens is tips on prepaid cards. Like prepaid cards in Ontario are illegal. Ontario set out that, this is how wages get paid to people this is how you pay your employees, which is 3 different ways: cash, credit card, or direct deposit. And it used to be their position, the Ministry of Labor's position, but now it's put into the law that gratuities have to be received by employer, have to be received one of those 3 ways. So that's where I just want people to distinguish between, they're like, okay, CRA control versus direct versus, say, provincial Ministry of Labor, where like no tip cards kind of. And then the last one, don't keep records of our tip division. Again, that's, Ministry of Labor comes in and they want to see how you divide the tips. And it's really, while they say it's if you, the employer, took part of the tips, I always say it's good idea just to have that out there. And for CRA too. CRA, wants to see sometimes that the employees have knowledge. I'll talk about that a little bit later.
And one key point here, Rob, we had mentioned about what's changed is that, in previous presentations where we had shared this, it was really only British Columbia, Quebec, and New Brunswick that had this very clear stance on credit card fees from credit card tips. But since then, other provinces have actually sort of posed updates. So for instance, now Saskatchewan, Newfoundland, PEI have been added to that list and what we do, folks, is that on a consistent basis, we contact these ministries of labors and we ask them directly. Something that you can also do, keep in mind, You don't have to be worried about self-reporting per se. You could always call anonymously if you want to fact check any of this. You could call and say, hey, I'm opening up a new restaurant in New Brunswick. I'm just wondering, would I be able to offset credit card fees from credit card tips, and have them explain it to you themselves. But this is the latest that we've got. So if you are in any of these provinces and are currently taking off credit card fees from credit card tips, that's something to be aware of. You should be adjusting that so you're not. We understand that it's perhaps not fair and it's going to be expensive for you, but we do really hope that we can bring this more to the attention of some of these implement standard acts at each province and the ministries of labor, so that they understand, if the business is not able to operate, then no employee has any jobs in the first place. So let's not go after the most hard hit industry and try to add more regulations that makes it even more difficult for them to operate. Okay, moving on from here. So we want to talk about two common myths. And these two myths are there, and often they are myths that force employers to have to keep their current process. Now, a lot of times employers tell us, listen, I'd love to move into a new system. I'd love to go into a way that I don't have to deal with manual tasks, but my employees are all saying, I want tips, cash, because they're not traceable. Now, nobody can really recommend that employees shouldn't be reporting, but we all know that in Canada, direct tips and the reporting of that earning is really up to the employee. So the business doesn't want to put it on payroll because it has additional expenses. The employees don't want it on payroll because also they are exposed to CPP and EI, which is 7.5% of additional taxes that they can legally be exempt from. But the only way to do that legally is to make sure tips are direct. Now, if you really want to have a direct tip system, you could still use cash, but this really means you have to have enough cash on hand for every shift, not at the end of the day, not the next day, for every single shift. So what happens is, you get a customer who comes in and leaves a credit card tip. The manager then at the end of the week goes to the bank and grabs the cash. They come back and they count the cash, and you may not have $67 because it's not like the bank creates these beautiful envelopes for you and rounds everything up and down. They give you whole numbers. You have to come in and deal with all the change. So you have the time that the manager is spending at the bank, the time that it takes to count the money, the time that it takes to put it on envelopes, the time that it takes for you to round up and round down and keep track of that in a spreadsheet. And you do all of this. And if God forbid you get audited, the biggest issue there is the records that the CRA looks for are your POS payment processor records, not the cash records that were, we got a little bit of an issue there, and not the cash records or anything else there, because everything gets tied to your accounting. You have to go to the bank and withdraw $10,000 for tips. The question is, where did that $10,000 go? If you say, I don't know, then the businesses are held responsible for that. Was it a cash advance? Was it income? Was it, directors getting bonuses? No, it went to the employees. Which employee did it go to? And you have to comply. So it's never, not never, but it's uncommon, very uncommon for the CRA to say, I'm going to look at the employee's bank account, because then they have to do extra work. They have to decipher, this $25 came because Johnny and his friends went camping and they shared it, and one of his friends sent him an e-transfer for $25, but this other $25 was tips. No, they make their job easier. They go at the source of truth, which is the POS or the payment processor. That's where the records really are. James, anything to add to that?
Yeah, I always think that people just don't realize they think CRA's got to audit to perfection before it's deemed to be a good audit, and that's completely incorrect, right? If you've ever been through an audit, you'll know that. What the auditors do, and it's a completely correct mechanism. It's okay. It's easy to see the credit cards, right? You can take the credit cards, you can figure out what the percentage of the credit card tips are from the credit card sales. You apply that percentage to the cash sales, which is on your POS. And voila, there is your cash tips. It's really not a hard audit. And CRA is allowed to do that and assume that, you received that. Or they can say, you know what, you've got 18% of credit card. I think you got 20 in cash, because people like to tip more in cash. They are entitled to make what's called assumptions of fact in auditing you. And when they make an assumption of fact, it's the taxpayer's responsibility to prove that auditor's wrong. So, say they're being reasonable and they use the same percentage they see for credit card tips from credit card sales. Okay, so you're saying but I didn't get that much in cash sales. That will always be up to the employee/employees to show that they didn't get that much cash. So that's always one problem with the old systems, right? When you're taking cash and you're putting it in your pocket and walking home, you had no idea what you have. Nor does CRA, but they have a reasonable way of estimating it. And when they estimate it, that's good enough for the CRA. And you have to disprove it. And the employees can never disprove it, right? Because they have no records. This is where, I actually say the electronic systems are actually wonderful because for once the employee can actually say, no, here's the gratuities I actually received, with complete accuracy, right? As opposed to what CRA guesses and then leaves it to the employer to try and show differently. I've been in matters where employees try, oh, look at I deposited, it's not enough. CRA is like, doesn't matter, it's cash, right? You could have spent it. Is it weird that a server spent some of the cash on the way home? So we don't think you deposited all the money. So that's why we don't believe you. And that it's still on the server to prove otherwise. So it's not that they're traceable, it's just CRAs, they're easily accessible. They don't have to trace, CRA doesn't trace anything. They just have to have what they think is an assumption. And then they go from there. And the taxpayer always has to disprove that CRA is wrong.
Exactly.
You know what? I'll take that opportunity too. This is another issue that I see, because I see it with cash systems, like when you're doing the safe and giving out cash. So I'm gonna say from an auditor perspective, what do I see, right? I see your merchant account that comes into your bank account, right? I see all these deposits. You're not going to report all that as income because you're going to be like, well, 15, 18% is gratuities that we paid out to the employees or the employee committee. And so that's the next question from the auditor is, okay, prove it, right? And if you've paid them in cash, how do you prove it, right? You could say, oh, I took this money out. But when you take the money out of account, that's all your bank statement shows is you took it out in cash, right? You don't have anything. So I'm always talking to people about how do you prove what you gave to the committee, right? You need receipts, because there's the employee, what they have to prove for gratuities. But as an employer, you always have to think, well, what do I have to prove that I paid out to the employees as gratuities, which is not my money and not taxable. And you have to remember that CRA is looking at your bank account and they just add up everything that's in that bank account. They say, explain to us why you're not reporting all that as income.
Okay, moving on from here. Customers ask for AutoGrad to be taken off. So automatic gratuity is considered an amount of tip that the customer doesn't voluntarily put. Like if there is auto gratuity up 20% on private events, on the BEOs, or if there is an AutoGrad already added to the bill, this really means that the customer didn't voluntarily choose to add the tip. And this is where that tip will be considered controlled. And as a result of it being considered controlled, it does need to be get paid on payroll. One other factor here is that it does need to also have sales tax added to it. So if I was a customer and let's say there was an event for $1,000 and the AutoGrad is 20%, the bill for me is 1,000 plus the 200 plus the sales tax. Let's say if it's in Ontario, another 13%, and that's my total cost. Whereas if it was not an automatic gratuity, I would pay the $1,000 plus HST, then I would pay the $200 separately. So AutoGrad does have some unique aspects to it, but one of the most important things here is that many operators tell us, look, we add the AutoGrad. If the customer says that they want it off, we take it off. And this is actually a big flag because as far as the CRA is concerned, AutoGrads, tips need to be opted in, not opted out. So by you adding it and the customer having to tell you, I don't want it there, you're making them opt out, which would consider it as a controlled tip. So really be mindful of this. It's not to say that you can't have AutoGrad or AutoGrad is illegal. No, it's not that. You could definitely have, and I know that's one of the questions, you could have a system where you have regular tips and then you apply AutoGrad to large tables. You apply AutoGrad to private events. It's just really important that you separate those pools. Your regular tips can be direct, exempt from CPP and EI, paid outside of payroll. Your auto gratuity needs to have sales tax added to it, and it needs to be paid on payroll. James, over to you.
So, yeah, I always try and dissuade people out of having an auto gratuity or a manual gratuity because I find, the first issue, right, is it's okay, it's automatically a controlled tip, and you have to take HST, which means your POS system has to be able to know the difference, right? When someone's taking a controlled tip, it's got to know to put HST on that gratuity because you don't want it's one thing to have a control versus direct issue, but when you start missing the HST on gratuities, that is a bill. And CRA takes HST very seriously, HST GST being that that's trust funds that you're supposed to have collected, right? So always watch out very carefully for your mandatory gratuities. And I say this can sound weird, but I'm in a matter where they looked on the restaurant's website, and the restaurant the owner didn't even know because it was so old, but it was like, an auto gratuity may be applied. And what that was that the servers were given the discretion for a very large table that they could go up to the table and ask, hey, rather than we can put you all on one bill, and we can apply an auto gratuity if you want. But if you don't want it, great, it's fine. We won't apply an auto gratuity. But what is CRA here? Oh, you said that there could be an auto gratuity on your website. Yeah, yeah, but it's not really an auto gratuity. It's up to the employees if they want to have a set percentage. I have another audit where the rulings officer was talking about, when you're on your POS systems and you've got the various amounts. She's like, oh, I don't, when zero's on the second page, I always think that the people have no control. I'm like, no, they do. They just have to flip through to the second page. But I'm just, if I tell you about auto gratuities and your automatic tipping systems or even your suggested tipping systems, always watch out about how discretionary it is. You always got to make sure that the patron has the ability to say, I don't want to pay a tip, right? Because otherwise that is an auto gratuity. If it's like, 1, 10, 18, if zero is not an option, that means a gratuity is mandatory, and that is an auto gratuity system, which, right, the EI CPP problem and an HST problem. So I'm always telling people, really, you got to really carefully watch out if you have any gratuities, and if you do, you really got to, make sure, especially if it's in the same dining room, right? Like it's one thing to have, say, a room where, you're doing a contract for, and you're putting an auto gratuity on the contract. All right, that's easy, and HST on the entire thing. But when you start doing tables of 8 in your general room, you've got to watch it, because what CRA is saying is, okay, listen, you can't distinguish between your control tips and your direct tips. We're going to find the entire thing is a control tip system. So that's the default, right? Unless, once again, you bear the onus. Well, show us all the tables that were direct tip. And it's literally impossible unless you have the certain POS system. So I always tell people, audit yourself. If you want to do an auto gratuity and you're in the same dining room area, make sure that you can audit that perfectly to distinguish that, here's the tables, there was an auto gratuity. Yep, we took the HST, and here's the tables, there was no auto gratuity.
Right. And that's something that we help operators with in actual. We do integrate with POSs to help segregate those types of tips. Okay, so a quick overview again. As a quick reminder, everything we've been talking about is that any business in Canada, even outside of hospitality, unfortunately, could add tips. Now, that is a decision that the business makes. Some other question that had come up previously that James addressed is that who decides that they want to have direct tips or control tips? Well, this decision is a decision that the business can make. So the business can decide we want to have control tips. The business can decide we want to have direct tips, or the business can decide we want to have a mix. As James highlighted here, our recommendation all along is that go with one, because that keeps everything much cleaner, much less susceptible to audits. Even though we do have many customers who have this, they got to really be careful of how they treat this and make sure everything is properly documented to separate the control tips from direct tips. Now, the reason why we keep emphasizing this is because, as we said, when there is an audit and you're determined with control tips, there's hefty penalties to pay. And this is something else that James helped simplify. If you guys Google direct tips or control tips, unfortunately, no province has any details on it. And even on the CRA's website, they only have a page and a half that is super outdated. We tried our best to simplify all of this. And this table is a representation of the 5 key areas that you have to be mindful of. So number 1 is volunteer tipping is direct, auto gratuity is considered controlled. And you may say, you know what, I have direct tipping, but on the side, we do these auto grats and I still pay them out as cash. And if they catch me, maybe, I'm just going to have to worry about that auto grat piece. And as James will tell you, no, that means that you've dirtied your whole pool. All of your total tips will be exposed to that penalty. Tip division models. The business has every right to recommend what they see as the fairest way to divide tips given their vantage point. They can see that from the host in the front to the dishwasher in the back, everybody contributes to the service. In Canada, we have minimum wage for front of house and back of house. They are not different. And in some cases, yes, back of house does make more money than the front of house does. That's 100% true. That's why in most cases we do see that, front of house does keep more of the tips. But the tips that are left by the customer are not specifically left for the people who interact with the customer. Because if a customer gets a burnt steak, a dirty dish, a kitchen who refuses to make a modification, it impacts their experience. It impacts the tip they leave. The customer leaves a tip on the overall experience. So the business can say, hey, this is the fairest way I think the tips should be divided. But the final decision needs to be made by a group of employees we refer to as a tip committee. And the reason why we say if you have 50 employees, you don't want to go to every single one, because then there's decision paralysis. You're not going to get someone to agree across 50 people. This is where we recommend a subset of the group of employees, like for instance, a group of 3 or 5, or in rare cases, when you have a significant team of 100 plus, maybe a group of 7, could be selected. Each person could represent a department. So let's say 2 people from front of house, 2 people from back of house, a manager who earns tips. They collectively become the tip committee and they sign off that this is the tip model we've agreed to. In 90+% of the cases, customers that come to us, they go on, they establish a tip committee and they keep the same tip model they had, even though they open it up to this group to confirm it. Because if there was something wrong with your tip model, you would already know about it. Your employees would already be complaining. After you establish a tip committee, then it's important that you're not in possession of tips and you're not processing the tips. And I've seen this question come up a number of times, and folks, I've answered it a couple of times, but just for the sake of clarity here, we know it is difficult for credit card tips to be given to the employees at the end of the shift because you don't even get the money deposited in your bank account until a couple of days later. We also know you may have tip models where, let's say, the back of house gets a portion from sales in the morning and in the evening, and the back of house has decided we want to get this pool to go from Monday to Sunday, or maybe even across 2 weeks, and then divide it based on our hours. That is totally fine. The thing that you got to be mindful of is it doesn't matter when the individual employee gets in possession of the tips. It's that you, the business operator, cannot be in the possession of those tips at the end of your shift. So one way that you could solve this, if you didn't want to use actual, or you wanted to do it manually yourself, is you do need to maintain a significant amount of cash on hand, so that at the end of every shift, you simply go and say, "Hey, tip committee, I see that there was $1,000 of tips generated at breakfast. Here's the $1,000. I don't care how you divide it. I just proved that I gave you that cash and you signed off on it. I'm not in possession of that cash." So this is something that can be done with cash on hand, but this means you have to have cash on hand all the time. It needs to be consistent. You can't say, "Oh, I missed it for Wednesday and Thursday, but we were good for Friday." You need to have it all the time. That's how you could prove that at the end of the shift, you've moved the possession of tips to the tip committee. The tip committee can hold on to it for 2 weeks, and then they divide it up based on the rules set. Processing of tips. Again, if the business is not in possession of tips, they should not be the ones that are processing it. The only circumstance here is that a lawyer, for instance, James here, could potentially create a side letter that the tip committee signs saying that, "Hey, we have a coffee shop. All my employees are junior, are students that are working part-time. Nobody wants to be responsible for dividing and distributing these tips. Can we have our administrator do this?" Tip committee signs that agreement. Now you have paperwork to say the tip committee said the administrator can distribute the tips. And that's your proof. And finally, we keep saying paperwork. You do need all of this so that you're able to defend yourself if an audit takes place. And from this, James, I'm just going to actually move over to your slides because we are short on time. And I think you'll essentially break these things down based on the cases that you've come across. Are you okay with that?
Yeah.
Excellent. So number one thing here over to James, like how to stop a problem that may have started from getting bigger.
So I'll just there's a slide I think a little bit ahead where I talk about the different audits that go on, but the one thing I'm seeing common to all audits is, CRA calls and starts asking questions, and they generally don't send letters. You've got to force them to put it in writing. They like to call because they don't want to put the time into the writing of the letter, right? So I'm always telling people, like, first, when you take the call, you don't have to answer them on the spot, right? It's like, you're driving on the 401, just treat it like that. Like, I'll call you back. It's okay. Everybody always thinks that they're going to jail if they don't give the answer to the CRA. And I'm always saying, how do you know it's the CRA? I mean, the only time we ever don't know it's CRA is when they start asking for, Bitcoin or Apple cards. So yeah, okay, this seems legitimate, but you know what? I'm going to call you back, or listen, I'm driving. I can't take your number. Please call back and leave your number. And then you verify who they are. But when you're gonna, then you make a meeting with them, like on the phone, to answer their questions. It's completely okay and legitimate. And in fact, that's what your taxpayer bill of rights talks about, right? Is there's no, you got to answer me now, park your car and get out and answer the questions, right? It's, I will get back to you. I'm going to get, and I know maybe I'll move into the second point is I really dislike it when people don't they say, okay, let's answer the questions, and they're not ready for the questions, right? What's this call about? Okay, it's going to be about the gratuities. I want to get someone from the tip committee, or I want my bookkeeper, or I want my accountant, or hey man, I want that cool guy named James to be on the call to do it. And this is what I do. We set up the call, I'll be with the clients, and then we go through and we answer what we can, and what we can't get, we go and dig and find. There's nothing worse than people trying to answer the questions and giving them the wrong answer, because everything you say to CRA is recorded, right? They take it and they set it in stone. And if you say something wrong, it's in stone. So I have a client where we were on our fifth audit, and the reason it started when CRA called someone in their HR department who wasn't authorized to speak to CRA. And you know why they weren't authorized to speak to CRA is because no one has said, hey, you know what? This is a little common understanding. No one speaks to CRA, right? Except for me or this person, right? Linda. And so the problem was that they spoke to this person who started answering the questions because she thought she had to, and she was going off the top of her head and what she thought. It was very lucky for them that we were at appeals. I was able to show that the answers were completely wrong, like they could not possibly be true. And that saved them, right? Because otherwise, the employer, the CRA, has heard these answers and believes them to be true. And, if they're a little different, unless you have it in writing, there's no getting out of it, right? It's like, oh, now you're just lying because you know what happens. It's like, no, we're not lying. That person had no clue. We can put them on the phone and they'll tell you that they shouldn't have talked to you and had no clue. But so coming out of that, like, they ended up getting, they lost that fight. They got 4 other audits after that. Luckily, I won the appeals, and then we won all the other fights. Um, and then I got a free drink at the restaurant. But this is the first rule that came out of that I had them do is no more, no, everybody, just tell everybody, no speaking to CRA. There's one person that's authorized to speak to CRA, and she was the smartest. She knew everything about the tip system. She could answer all the questions. I was like, I don't know why anybody would let anybody else answer it. So Linda is going to do all the answers. And everybody knew that, right? No answering the phone to anybody, to CRA. And that's okay. It's okay. Like, everybody always thinks that CRA has got to answer them. It's okay. The second thing I always tell people is get it in writing, right? It's not, there's nothing that says you have to answer the questions orally, or the CRA only does it orally. Honestly, they're just saving their time. I just put it in writing. And I try and tell them why. And it's because when I get your questions in writing and I give my answers in writing, we both have 100% perfection as to what was asked and what was answered. There's never any ambiguity. Ambiguity is what creates problems, right? Mistakes create problems. If I put it in writing, you've got to understand that I can't ever go back from it. Like, you're in tax court and you show me what's in writing, and you get that classic, were you lying then or are you lying now? Boom. So I always tell CRA, you want it in writing because that helps your case. So they don't like to put it in writing, but I try and show them why it's in their best interest. So Um, and you're always entitled to have a representative, right? That's your taxpayer bill of rights. The idea that the choice between or the distinction between controlled versus direct, as I said, is a razor edge, where I'm now getting asked really hard questions by an appeals officer, or maybe a couple appeals officers and a rulings officer, and I really think the CRA has changed their questions and they've really educated themselves about restaurants. But we had these questions, and I was like, okay, I'm going to talk about control versus possession, right? Like they were trying to say that, for instance, XDM, right? Oh, they signed the XDM agreement. I was like, no, the employees okayed the XDM agreement, right? They had to sign an agreement to have a pre-authorized debit from their bank account. It's not exercising control over the money, right? The money is received a week before, it's held in trust for the employees. And I go through the entire system and I try, I'm showing them why the form that you sign with XTM is not control. But that's a very technical question, right? So that's why I always say having a representative with you to answer these questions is insanely important. An institute of policy, right? That restaurant, I helped them create a policy about nobody answers CRA, right? Like we were all old enough, we'd remember the saying, loose lips sink ships. And that's the case, right? You don't have people talking to CRA because it never helps, right? To give them the wrong answers. It wastes their time, wastes your time, and worse, it ends up in you potentially getting reassessed and then having to fight it and paying a lot of money in the fight.
Exactly. Okay. We do have a couple of minutes left here, folks. I'm doing my best to answer all the questions. One thing I'll mention here is that we do provide free consults. So if your question wasn't answered or you had specific questions about a specific scenario, you can always reach out to us. We'll be happy to take a time to walk you through all of this in more detail. But I do want to give it back to James here to go over how do these audits happen, and then we'll do our best to answer as many more questions as we can.
And
James,
as
over
an
to
answer
you.
question, hit return. So in the past, you would see it's very rare that you see sort of an industry audit, like they went into Niagara region and they just hit everybody who was there, Andrew Peller, Hard Rock, all of them, and audited them all. And then they went through all their books looking at what was paid to all employees. You'll see that too in payroll audits. I've now seen a payroll audit where they were looking at a bunch of things, like, for instance, was a brewery, and they gave their general manager, because they had a bunch of places they had to visit, a vehicle for personal use, to use all the time. So CRA is like, hey, where's your personal use? But they also looked at the tip system and said, hey, it's controlled. And then they looked at all the employees, what all the employees have been paid for the purpose of all the employees' T4s. Those are rare. The second most common is you lay off an employee and they go to Service Canada and they say, hey, you know what? I had a control tip system. I should get more EI and CPP. So laid off, maternity, paternity benefits, right? That's your go to Service Canada. Service Canada will get an auditor and you will have a ruling done, or Employee Services Office. The most common way that's happening, it's just started in the last maybe 2 years, it's the CPP Contributors Program. CPP Contributors Program is looking at employees' T1s, where the person has put an amount on line 104 or 10400 as a gratuity amount being reported there, and then they see that there's a T4 from a restaurant. They're then calling that employee up to ask them questions to say, hey, what's this about? We need to understand what this is being reported and reflects. Is it a gratuity? And if it's a gratuity, tell us about it, right? Because it's a tickler system. They're looking, does it feel like it could be a controlled tip system, or is it, pretty safe as a direct tip system? If it's a direct tip system, then they go on their way. They don't care because no change has to happen to that person's T1. But if they think it's controlled, then they send a referral to a rulings officer. So this is where generally the employee gets called out of the blue, and you, the employer, will get called out of the blue, right? But it's a tickler system, and this is one of the things that we're trying to change with my clients, and we're working through actual is you got to educate your employees about what's going on. The problem is every single one I've been on, the employees try and blow the CR off by giving them vague answers about what it is, because they're worried about one thing. they didn't report everything. They reported, 10% or 50%. And they're thinking in their head, they're freaking out because they're like, I don't want CRA to figure out what I really got. And I always like talking to them, it's like, that's not what CRA is looking at. Like, if you give them the answers that, hey, listen, there's a tip gratuity, I get paid by the tip gratuity committee. They decide if you want to talk to the tip gratuity, it's John is my, is the person I know. And as I understand it, they get the money at the end of every shift. Blah, blah, bang, bang, all perfect answers. An employee services office hears that, they go away because it really sounds like a directive system. What do they normally hear? Oh, I don't know how I get paid. I get paid every 2 weeks. Yeah, I don't know. I think my employer pays me. Oh, those kind of vague answers that sound controlled. If that's the case, then then get into a rulings officer. A rulings officer will send a letter. Hi, I am your rulings officer. I'm looking at James Rhodes for his, January 1st, 2024 to December 31st, 2024. Blah. And then they will follow up with a call, and they will send the same letter to the employee, and they will look into it. The rulings officer is the one who makes the final rulings. They will determine whether the gratuity is controlled or direct. If it's direct, the word is it's not pensionable or insurable. If it's controlled, then it is pensionable and insurable earnings. So that's the rulings officer's job. And so say you lose at the rulings officers, they do a reassessment. You have to file an objection to that. Or if they assess you for, you get an assessment for CPP-EI owing on that extra amount, you can file an objection to that. I always try and make sure I object to both and put them together. So, but if you're objecting to that, the next CRA person that you talk to is a CRA appeals officer, who's then, charged with the task of looking at whether that assessment was correct, being were the gratuities direct or controlled. And I say that because that's what CRA says, right? Direct versus controlled. The legislation actually says pensionable or insurable. So if you see, you're wondering why is there different words? CRA just helpfully makes up the word direct or controlled because then they helpfully make up their rules as to what's direct or controlled. So that's where I say, when you see the words pensionable, insurable, those are the true words under the Employment Insurance Act and under the Canada Pension Plan. I think that's sort of it. I do want to talk. How's that, Ashton, for time? Because I was going to say I also wanted to talk about the questions.
Yes,
Okay, yeah,
we
you know what?
are at
This
time.
next.
Yeah.
Okay.
But I would say, James, it would make sense to spend a couple minutes here, folks. I know that we've gone over, again, going through and hopefully can answer some more of these questions. Again, we are happy to take one-on-one. It's a free consult, no obligation, just to explain things in more detail. But James, why don't you spend a couple of minutes on this while I do my best to answer more of these questions live, okay?
All right. So, the tip committee, you call CRA up, you look at their bulletin, you won't see anything about tip committee, right? The idea of a tip committee, though, is it would be, impossible if you have, say, 100 employees for them to get a coherent decision. So much like Canada elects people, maybe we'll call our politicians the tip committee. That is what a tip committee is about. So I always, as I tell people about tip committee, they're always like, hey, what are the rules for it? And I was like, well, honestly, there are no rules. I try and follow good governance in setting it up, right? But the idea is you need the employees to give you the first, right? We're talking about what is the tip sharing for, say, 2025. You need that in writing. If you don't have a tip committee, then you get all your employees to sign it, right? If you have a tip committee, great. You have them sign it. What I'm seeing CRA do now is they've actually got advanced. I think they watched maybe one of my webinars and they're like, oh, let's ask questions about the tip committee. And I agree with that because I've been in matters where the tip committee was a bunch of marionettes, where it was just a puppet show of employees being told what to do by the employer. This is the reality is you've got to give up the control. If you could do control tip system and you can exercise all the control you want over it, great. You're paying the EI CPP as the employer. But if you're going to not pay the EI CPP and you want it to be a direct tip system, I tell everybody you got to give up the control, which I think is sometimes the hardest thing that for the employer to do, that they control everything in their restaurant, right? So it's always relinquish all control. You got to let it go. So this is where, all right, you let the employees go. I have a governance document, but you just governance rules, right? When do you meet? Okay, that's really up to them. You want to set some kind of minimum, like make it more than once a year, right? They can meet monthly. You should have elections, right? They gotta look like they represent the employees. CRA actually asked me that in two different ruling audits. Hey, when are the elections? It's like, okay, they're scheduled for a year. They just literally, started 6 months ago. But I now tell people when I start them off with we start them off with the employee committee and we say, okay, here's your go, here's your rules. Do an election in 3 months. So I'm telling everyone to do elections quicker so that you can once again show CRA, oh, the election was on this date and these are the people that were elected, right? And once they get elected, they make a decision on the tip committee, the tip sharing, and they put it in writing and they sign it, right? Even if it's last year's, okay, last year's is the same, here it is, we hereby sign it. So you've got to do those things. And the other thing that I like the CRA is asking me too about this. They're like, what else does the tip committee do? It's like, can you show us other decisions? Sure. Like for instance, I had the tip committees hire Actual because Actual is actually the agent of the tip committee, right? When Actual takes the money from the employer's bank account as the agent for the tip committee, when they get it, that means the tip committee in law is deemed to get it. And when the tip committee gets it in law, that's because they're the agent of the employees. The agents have got it. So that's why I make the tip committee make that decision. And it's really good to have the minutes. And so what we're working on right now is like CRA is asking, do they have minutes? And I'm like, honestly, like most of these places, it's a bunch of employees who, might be getting together, at 1 a.m. to make some decisions. So, but now I'm trying to say, you know what, I would make it mandatory. Have your employees literally go on to Teams and we'll record it where they make a bunch of decisions, or they just have to write up their decisions or what they talked about in short form and sign it, right? I mean, there's so many programs now that will auto capture everything that's said. They just print that out, all of them sign it. There's your minutes, right? But CRA more and more is asking for good governance things to show that the tip committee is real and not a bunch of puppets. So that is a really big thing that I think people need to know. So, and I'm looking at a questionnaire that I got for one of my clients, right? And I'm just going to read them out to you, right? Who initiated and proposed the tip sharing arrangement? Is the arrangement documented in writing? If yes, provide documentation. How are employees informed of the tip sharing arrangement? Bracket, onboarding materials, policy document, written notice. Do the employees sign a handbook when they start working? Have there been changes to the tip sharing formula since it was implemented? If yes, when? Wired cash? Yeah, that was a dumb question. Sorry. Um, who selected and implemented the third-party tip platform? All good questions, right? And I'm always working with the employer to say this isn't what it happens. But as much as possible, you want your employees to have made these decisions at what they do, right? The signing of the agreement to have the money come out of the bank account, that can only be done by the employer. It's their bank account. But the idea is you're showing in a written document that the employee committee has hired that third party tip system to take the tips, to take the money out.
Mhm.
Yeah, so there, and that's where, the next bulletin is, your tip committee should be taking care of everything. One of the big ones I see is fights over tips, right? You have a 8-hour shift, it's slammed at the start, it's dead after 2, the employer cuts them. The employee's like, that's not fair. I shouldn't get, 3/8 of the tip pool because I was cut. The employer cut me, we were slammed at the start. That's where all the tips came. I don't want in the past, managers would be doing that. And no, managers cannot make that decision. It's the tip committee makes that decision. So, in the governance document I always say like 2 employees or, an odd number of employees get together and make a decision. I shouldn't say 2, I should say 3. Some odd number of employees, because that way you're just never deadlocked. They make a decision over what should happen with those gratuities. And the idea is you and the employer, if CRA hears that you as the employer are making determinations as to the tips that get shared, that's control. Even if you've done everything else so wonderfully, right? Oh, here's the tip sharing arrangement signed by the employee. Here's the tip committee hiring the third party provider. But you know what? We have an employee who says that you get involved in deciding tip disputes. That's control, right? And I say, I'm not joking when I say CRA defaults to controlled when you think that you might be 99% direct? No, 1% can kill you.
So there are still 32 questions unanswered, but a lot of them are about tip committees. So I'll just mention one thing, folks. The most common question I see here is that can the tip committee select the bookkeeper to manage this? Yes, they can, but the funds cannot be in possession of the business during that time. So you do need to move the funds to that bookkeeper for that bookkeeper to hold on to, be like either immediately at the end of the shift or even before the shift took place. In our experience, the previous clients that did this before joining us, the tip the bookkeeper was taking 4% of the total tips to manage this, which is super expensive. So again, that's why our system exists. Now, the only thing I'll say here is that we're happy to provide a lot more information on this on one-on-one. If you do need to contact us, hello@onactual.com is the best way. If you are looking to contact James, we'll also be able to publicly share his contact info if he's comfortable with it about that as well. Thank you so much for joining us. Anna, thank you and the team for helping us even go a little bit longer than planned. But also I want to thank James for his extensive insights into all of this.
Yeah, of course, as always, thank you, Afshin and James, for bringing your expertise to this super important topic. And like I mentioned at the beginning, a recording and a copy of this presentation will be sent out to all folks who registered about 24 hours after this webinar. And then, of course, as well, I will make sure to share the questions list, the remaining list, if you're not anonymous. Hopefully Actual can reach out to you and answer to you directly. Again, thanks everybody for being here and enjoy the rest of your day.
Thank you, everyone.
Yeah.